Talk to me about upgrading the stock when they've come out and they have basically said, hey, guys, lower your expectations.
Yeah, so yeah, of course you want to put that into context. We actually downgraded the stock in August. What we saw at the time was two things. Consumers keeping their iPhone longer and longer. They like their iPhone very much, but they replace them less often. And then the fact that in 2018, the iPhone 10 was extremely successful, the first iPhone 10, and that created a pull forward of demand with a lot of consumers replacing their phone in 18 and not being in the market anymore in 2019. So this is exactly what's happening today at Apple. And as we see that playing out today, we feel like our call has played out. And so what else do we see in what Apple said yesterday? We see an economic weakness, like a broader macro weakness, especially in China. And Tim Cook, in his letter to investors, has been very specific about it. And from what he said, we estimate it's about 20% of the weakness. So 80% of what happened to Apple is really this air pocket in demand in 2019, and 20% is China being very weak. And so going forward, what we think is that Apple doesn't have any specific relative further downside risk. So we upgraded to neutral, but our price target is $140. We think the stock is where it should be now.
Why do you think there's no more downside risk? I mean, if the Chinese economy falls further, if a trade war lingers, you know, we had talked briefly about this litigation with Qualcomm and whether Chinese courts will follow through in banning some older versions of the iPhone. And Tim Cook said some of those older versions of the iPhone are important in emerging markets because they cost less.
Yes.
So how do you see there being very little downside risk?
So one very important thing to consider is whether the downside risk is broader than Apple or specific to Apple. And our rating is relative. So if the situation in China worsens, it's bad for Apple, but it's actually bad for everybody. So I don't really care. Now, if you think about things that can be specific to Apple in what you've listed, I would say China is not. The broader macro is not. What's really specific to Apple is the risk that the business is broken, people like abandon their iPhones, and we don't see that coming through. The risk that people replace less often their iPhones, but that we say it's in the numbers, it's in expectations now, so it is in the stock price. And then the last thing you mentioned is, of course, Qualcomm. So I'm happy to come back to that, and I see that as a relatively limited downside risk.